Good afternoon, it's Adil Fazal, market analyst at CFDs.com, a leading spread betting and CFD brokerage. Certainly be sure to visit www.cfds.com for further products and services. With regards to your educational aspect, be sure to visit www.cfds.education to certainly get constant updates on the markets and charts and analysis going forward. Okay. This is a European market wrap-up, so I'm going to sum up the actual close in terms of the European indices. Today, the European indices certainly found weakness earlier on until they managed to come off the lows, and I'll certainly discuss as to the reasons why in chronological events. We basically had the Asian markets down overnight overall. The Shanghai was more or less flat, but the Hang Seng and the Nikkei was certainly weak overnight. We had the Shanghai up 0.2%, basically flat, up 5 points. And that was primarily the risk-off scenario was due to the fact that we had Chinese data on the weak side. So we had, in terms of Europe and US, we had imports certainly worse than expected. And with regards to exports, they were actually stronger than expected, and the trade balance data actually came out stronger than expected for the Chinese market. So domestically, they certainly seem to be sound in terms, or economically sound, as opposed to the European markets. So in order, especially with regards to emerging markets, it's a concern because of the import side of the equation, given the fact that obviously they are 1/4 of the or 1/5 of the world's population. So it's very important that the Chinese consumer remains strong. Especially if they want to sustain the IT industry and sustain the commodity sector as well. So it's that aspect that actually concerned a lot of individuals, because the whole concept of the Fed delaying rate hikes was due to the fact that emerging markets were going to get hit, and etc., etc. And the whole rally itself has been on the fact that the Fed will remain obviously dovish for longer, or easier monetary policy, or loose monetary policy longer than expected. The expectations certainly have shifted over the last few days. So that was the summation, that was the expectation. So Chinese data obviously spurred off a risk-off scenario, adding the fact that you had the German data actually triggering off a further risk-off scenario. So we had weaker German data that came out, the economic sentiment, ZEW. So you had a number of slate of economic data that actually indicated risk off, so a bearish scenario. So again, growth concerns come back to the forefront. You had the Aussie and the Kiwi hammered overnight, and the dollar itself catching a bid based on the fact that we had obviously weak economic data, which obviously raises concerns. And given the fact that the Aussie and the Euro, Aussie and the Kiwi have rallied so substantially, the market certainly reversed course. Now I'll just bring up the Aussie and Kiwi here as well, which are quite important for this analysis. So bear with me 1 second. Let's just quickly bring up those charts and just demonstrate to you. Okie dokie, so you can see here the Aussie itself. I mean, we had the Kiwi dollar at 0.674, sell off quite substantially overnight, down to 0.6655. And also in terms of the Aussie as well, as you can see overnight, we had a pivot high of 0.7380 until we eventually gave it all back. So this is basically where we stand at present in terms of the actual market itself. Okay. This is certainly the scenario in terms of risk that the market has embraced. So the Aussie and Kiwi obviously down based on Chinese data, weaker obviously German data as well. Now that actually didn't affect the euro or force the euro down, even though we had inflation data slightly beating to the upside in terms of German inflation. So that certainly helped the euro and kept the euro afloat. And given the fact that we've had several anti-QE speeches as well, that obviously has served to sustain the euro and keep it afloat. Also, given the fact that risk-off scenario favors the euro USD, and that obviously forces the euro USD higher, given the fact that EU equities start to sell off. Now you can see the risk-off nature in the markets by looking at the German DAX, because the German DAX is the market that I did explain in yesterday's video, I think, if I can remember correctly. or yesterday's analysis on Twitter that I did explain that the DAX would lead the sell-off in global markets. So we can certainly see that here with the H&S formation, which I had highlighted, and that's exactly what transpired and caused the or triggered off the risk-off scenario. Looking at a 60-minute chart of the German DAX, you can see that we are making lower lows and lower highs. Looking at the larger scheme of things, I mean, that's certainly looking at it from a micro level, but looking at it from slightly a macro level, you have the H&S formation now in the German DAX. So this remains a concern, and you can see here the right shoulder obviously is going in. The fib retracement ratio of take it from the fib low to the high, and you can clearly see there you've got a fib retracement of around 50 to 61%. So the US markets certainly have been quite stubborn and certainly are holding the actual global markets higher at present. How long that will last, we will soon find out. But from my perspective, the markets certainly are expecting a potential flush. So you can see a H&S formation in the German DAX on the 60-minute chart. The 10-minute chart, obviously, I explained overnight that we are going to get a flush, and that's exactly what happened when it went down to gap fill, slightly lower. And the next support level certainly seems to be on that 9900 level. Okay, daily chart, again, you are into that doji candle, certainly has held. And the markets obviously have sold off quite substantially, closed the pivot, or should we say the actual gap below. Now the next move obviously will depend on the Nasdaq, given the fact that the Nikkei was obviously negative overnight. That's not exactly positive for the DAX itself. The 10-minute chart, again, you've had this thrust higher from the pivot low 9940 up to 10070. Quite an impressive rally. Previous support equals resistance in the market obviously has given way ever since. All eyes will be on the 60-minute chart of the German DAX to dictate sentiment in Europe. Okay, so all eyes on the H&S. The pivot high is 10190. The neckline is 9930. So you're looking at a 160-point drop from 9930. So that takes you to around 9870, 9770. Bear in mind you do have an unfilled gap below at 9550. So you have previous resistance equals support around the 9770 region, and obviously you got the 200 MA there as well. So again, that will be tested, and that will certainly come into the equation. Okay, so bear in mind German data weak, Chinese imports weak, so the outlook certainly doesn't look very spectacular. Okay, now let's have a look at the other additional bearish argument was Mr. Bullard with his hawkish comments, and that was obviously another risk-off scenario for the global markets. Now, let's just cross-reference that with the MDAX and see exactly how the MDAX is trading. You can see there's a flush on the daily markets of the MDAX. We can also cross-reference that with the tech performance index because it's very important, especially with regards to the Nasdaq, and you can see here the market has been flushing. There is an unfilled gap below that certainly needs to be watched out for, and that certainly is something that we can expect to potentially close given the weak economic data. Now you can see here the divergence between the tech all share performance index and the Nasdaq, very strange. Okay, the Nasdaq itself is certainly thrusting higher, yet the tech all share is certainly weak. And like I said, the next level of support is around this 1970, which is gap fill. If that fails, then you have horizontal support below. So don't be surprised to see the Nasdaq certainly pushing lower as well. Okay. Now the other index that I can look at is the FTSE 100. Now we've certainly held that resistance zone, which I expected and which I did explain and talk about. But the main the formation that we need to observe now is the H&S formation. As you can see here, the FTSE has the right shoulder potentially going in now at that 6360 level, and certainly that resistance zone holds. Now I'll just confirm my bias on this occasion. I do remain short the FTSE from 6356 average, and my stop loss is now break even, and looking for a potential flush down to the 6500 and possibly lower, given the fact that the fundamentals are certainly remain bearish. Okay, and the most important factor is the S&P 500. Now I don't have that chart here, so let me just add that in as well, because the S&P 500 really does dictate which way European markets will move. Now if the S&P 500 holds that 2020 resistance zone, then expect the actual markets to European markets to flush. If the S&P breaks past that 2020 zone, as you can see in the daily chart there, then expect the actual European markets start to reverse and pivot higher as well. 60-minute chart, you can clearly see we are holding that resistance zone as we speak, and we certainly seem to have this rising, or basically yes, a triple top pattern Okay, and 10-minute chart, topping tail in the market obviously has flushed ever since. The support zone on the S&P 500 is going to be down at the 20,007 level, and we'll see whether or not this market can actually sustain this sell-off or we reverse. Okay, the fundamentals state that we are going to go lower, especially given the fact that the VIX is obviously into support and looks bullish on that occasion. Now, talking about the VIX, let's have a look at the European VIX. Let's have a look at the Euro Stoxx VIX first of all. As you can see here, Euro Stoxx VIX is certainly into support, and certainly is pushing or certainly making a strong argument to go higher, and that obviously would mean that the European markets are in for a good hammering, shall we say. Okay, so you are looking at this downward sloping contracting a wedge for a pattern, and we are on the verge of a breakout. We have this bull flag formation. We're consolidating here. You have an inverted head and shoulders formation. Left shoulder is there. Your head obviously is there. You're putting in the right shoulder, and off we go to the races on the upside. So that's basically what I'm expecting to occur, and that's what I would be anticipating for the actual VIX in terms of European markets to do, and then obviously the European markets would obviously then melt on the downside. Now the CAC also has a volatility index. It's a shame the DAX doesn't, unfortunately. If anybody is aware of one, please do update me, but I'm unable to find this on my Pro real-time charting package. Let me just bring up the CAC. The CAC is have I got this here? Here we go, CAC volatility index. So the daily chart certainly seems to have put in a bullish candle today. Looking at the 60-minute chart again, you are into oversold territory here, and we are looking at a potential. Let's bring this here. Okay, so again you have this potential here for an inverted head and shoulders. So your left shoulder is there. You've obviously put in the head. You're looking at a right shoulder, and obviously the market's to certainly reverse course. So the CAC itself, in terms of its volatility, certainly is showing you early signs of a reversal, which obviously means bearish for the actual index itself. The daily chart obviously has held the resistance on the French CAC. The 60-minute chart, as you can see, we have this lower high now, and that certainly needs to be respected. You have this bear flag formation on the French CAC. We've obviously consolidated and looking for a next thrust or move lower. The next support zone on the CAC will be around the 4530, and then obviously you've got the unfilled gap below. One of the overwhelming bearish factors at present for the European indices is the Euro USD. The Euro USD is currently still trading around the 1.1380, 14.14 region, and that obviously is a cause for concern. Now, previous support obviously does become resistance, so that's going to be very important with regards to the French CAC. So certainly observe that and watch out for those levels as well. Okay, so lower lows and lower highs certainly remain the dominant theme in terms of the French CAC. Now, looking at the Euro Stoxx, let's just cross-reference that now as well, given the fact that we are observing the European indices. Let's go to the Euro Stoxx now. Here we go. Euro Stoxx, looking at a daily chart first and foremost. Okay, so daily chart, again, ever since we've closed that gap, it's certainly acted as resistance. 60-minute chart, lower high. Okay, so again, acting as resistance. And the 10-minute chart itself hit a 200 MA into the fib 61% resistance. Okay, and obviously has flushed ever since. The 3215 level certainly seems to be holding as support, but given the weaker German data today, I do expect a retest of that 3190 level again on the downside and a potential flush lower. The S&P 350 is always a good index to cross-reference any European strength or weakness, and you can see that the daily chart certainly is into resistance and holding. We've obviously on the 60-minute chart now looking to make a potential lower high and looking for a lower low. Okay, so again, certainly indicating weakness from that perspective. The actual dollar index itself, like I said, has closed the gap above. So again, given the fact that the euro is kept afloat, even with the weaker data, the focus certainly remains on the higher inflation data and the general risk-off scenario in the markets at present. Crude oil obviously has flushed ever since we obviously retraced and is holding that $48 region. On the daily chart, it's basically bearish consolidation. Now, today's Chinese data and German data just didn't actually help the argument for the oil price to certainly move higher, so therefore you are looking at a risk-off scenario. And again, the whole market hinges on the S&P 500, so all eyes on the S&P. And given the fact that we've held that resistance, put in the topping tail, The daily chart certainly is acting as resistance because we've put in 3 doji candles thus far. Okay, folks, I think that's a wrap in terms of European indices. Like I said, watch out for the German DAX H&S formation, the 60-minute chart, and you are looking at potential projection of around the 9780, 9730, then obviously gap fill 9550 based on the weaker German data that came out today post the Volkswagen crisis. I think that's a wrap. Be sure to visit cfds.com for your trading needs, and educational website as well, www.cfds.education. Goodbye and good evening.